Good morning, America. Good afternoon from Germany. It is Friday. The trading week is almost over, but we have some major news today because it is first Friday of a month of February and we have non-farm payrolls in about 15 minutes. So let's hop into and see what the market is about today. We had the major news the day before yesterday, and yesterday we were live streaming on Wednesday for Federal Reserve interest rate decision, and yeah, unfortunately I wasn't able to live stream the press conference. As expected, there was even more movement, so let's just go back to the previous 2 days. We had a lot of movement to the upside, as you can see, and yesterday after market close we had earnings of Amazon, of Apple and of Google. So let's see these stocks. The earnings were a little bit worse than expected in terms of earnings per share, but I think it was not too bad. But they had their worst earnings for several years, especially Apple. So earnings miss is never good, but Apple was always able to have better earnings than expected. But this time was I think the first time for 7 or 8 years they missed the earnings, and yeah, this was pretty bad for Apple. As you can see, it went down about 5.8% after hours, but could recover immediately during the analyst conference and then moved down again. So still a lot of volatility right before the announcement of non-farm payrolls. So let's go to English website here and see non-farm payrolls today in about 12 minutes and the unemployment rate. For all of you who don't know what non-farm payrolls are, non-farm payrolls measures the change in the number of people employed during the previous months, excluding the farming industry. Why excluding farming? Because as you can think, there's a lot of volatility in the farming sector, hiring and firing, and therefore we want to exclude it. It's like core CPI. With core CPI you exclude all the food and oil and electricity. So everything which is moving a lot is excluded, and therefore with non-farm payrolls we have the exclusion of the farming industry. So the expectation is a little bit lower than in the previous months. As you can see, the expectation in the previous 3 months was 200k. This time it's only 185k. But in the previous months we were always able to have better than expected numbers, so higher than the forecast. And normally this is not a good sign for the market because we had the inflation risk. So there was always the risk, if more people are hired, then we have the risk that more people can spend money, and this can cause higher inflation, and therefore the interest rate levels have to rise faster or higher. But I think we are at the tipping point of the change from the fear of higher interest rates to the fear of a bigger recession. Therefore it will be interesting how the market will react today, because we will see if the market reacts positive or negative, if the number is still higher than expected. So let's see the previous reactions of the market. The last one was on January 6th and December 2nd. So let's go to these 2 dates. January 6th was the low point. As you can see here, this was the low point of the market, and you can clearly see we made lows of the day, a retest of the previous low, and then we had a huge rally to the upside. So this was a tipping point for the market here as well, the last time we had non-farm payrolls. And let's go now to December 2nd. So December 2nd was here at the high point. As you can see, we had the day before a pretty high point here, December 1st. And on December 2nd, as you can see, we went down, went up again, and had this interesting candle with a huge wick on the downside. So all non-farm payrolls days were days with heavy volatility, as you can see, and were tipping points, either on the upside or on the downside. And I'm really curious how it will work this time, because it can be like a 2nd December, so at the high point and from a lot of volatility. As you can see, we were down pre-market, went higher now, and maybe we will form a candle like on December 2nd. That would be ideal. This is what I would expect today, to form something like this, because we are still overbought a lot. Earnings were not good, so this news are really bad for the market with the earnings. We have at the moment about 65% of the earnings were met or better than expected, but the rest, the 35%, didn't meet the expectation. And yeah, this is a pretty bad number for earnings season, and especially with the big earnings miss here of Amazon, Apple, and Google, I think there is a lot more possibility to see lower levels again. Maybe not a bear market right now, but a pullback here to the closing of the day before yesterday would just be healthy. So this would be 12,400 points in Nasdaq, and this is in percent is a 2.8% to the downside. So there's a lot of room to the downside. I think more room to the downside than to the upside, but I know I already said this on Wednesday and we rallied a lot, so I didn't expect this lot of rally to the upside, but I think it was just short squeeze. It was a technical thing, because a lot of traders were positioned to the short side and had to close their short positions and were squeezed out, and this caused a lot of FOMO from all these traders who haven't had a long position right now, and all the others who were short had to cover and also buy, and this caused this immense rally here. But I think it's over now. We are right below the 13,000 level. We had high points yesterday of 12,950, and it was like a double top. If you look back here, you see during the trading session we had a high point here of 12,934 points, and then right at the earnings we went higher here when the earnings came out of Amazon and Google, and then immediately this drop. So this is a double top here. We just pushed 20 points above to trigger some other stop losses and then went lower, and therefore I think the same will happen today. We will just try to push to the pre-market highs here from my time midnight. This was a 12,761 points, so we are about at this level. 12,601 point was the high point, and we retested this level now, and let's see if we can push a little bit higher on non-farm payrolls and then see lower levels, retest of the day's pre-market lows and then lower levels. So the next targets here with Fibonacci, I just drew a Fibonacci level here from the high point of yesterday to the beginning of the outbreak the day before yesterday, and there you clearly see the important levels. So the low point here of yesterday is the first Fibonacci level. This is sitting at 12,680 points, and the next level would be 12,525 points on the downside. On the upside, of course, previous high points here, 12,950 points, and the important 13,000 level will be important on the upside. What else? Yeah, let's see the single stocks here. The same for Apple. The previous highs at the $152 will be important. Let's see it on a day chart because it's more interesting to analyze here. If I go on a week chart, you can see it a little bit better that we had the previous high point here at $157.50. This could be the next important level. On the upside, about 3.5% room to the upside if we break the highs of yesterday. And to the downside, I would use Fibonacci retracement. So let's draw this Fibonacci retracement from the high point of yesterday to the low point here of January 3rd, and there we see our levels. So the low point of yesterday is a Fibonacci level, and the closing of the day before yesterday is a Fibonacci level, $145.55 and $141.46. These are the next levels on the downside, and the next level to the upside would be the previous high point here. So for Google, let's see Google. Google is also interesting because yeah, we had a lot of volatility yesterday. As you can see, we went to highs of $113, and I was drawing for my clients, for my German clients, I was drawing levels here right before the closing, and I said this would be a potential high point here, and we had a Fibonacci level. So the Fibonacci levels were drawn from this high point here from August 15th down to the low points of October 31st here on a weekly basis, and you see the 50% Fibonacci retracement level would be right here where we had the previous high points at around $103.30. So this can be an interesting level today as well. On the upside, again, the previous high from yesterday, but we just met the resistance zone and then were rejected yesterday, so it worked perfectly here. And for Amazon, also interesting on a day chart, here we have the 50% Fibonacci retracement. We couldn't close above yesterday, and you see the huge pullback yesterday forming a red candle, but we hold the level above the $106 area. This is the 38% Fibonacci retracement if you draw the Fibonacci here from previous August to the low points here of December and January. Then we have our retracement levels. Previous high point on the upside would be here around $121. This can also be an important level on the upside. So let's see Euro USD. This is the most important forex exchange pair if you want to trade on non-farm payrolls, because especially here we will see a weakening or a getting stronger US dollar. We had a high point yesterday at 1.1033, but then went lower, and I was saying to my clients, look, this can be an early indicator. If the US dollar is getting stronger, money is flowing back out from the riskier assets back into cash, and this can cause the stock market to go lower on the earnings. And this is exactly what we had. The money was pulled out of the stock market, and we could see this really early. So if you go back on a 15-minute time frame, you could already see here before the market opened yesterday, there was a huge push back here to the downside in Euro USD. And yeah, it held until the closing of the stock market, and therefore I was pretty sure that we will probably see, not an earnings miss, you cannot expect this, but that the stock market will pull back probably. So now we are holding the low levels of yesterday, but for sure today we will see more movement here, and this will cause Euro USD either to rally and to retest the previous high points, so this would be a 1% to the upside, or to break below the previous lows here and to retest previous lows at 108. So this is an important level here, 108 for sure. And if you draw a Fibonacci again from the high point to the previous low point here, we see this Fibonacci level with the low of yesterday will be important, and the next stage will be here 108.50, 56. This can also be an important level today. And yeah, let's just see. Tesla is also interesting. We went at highs to $196.76 yesterday, pushing pre-market again today. Yeah, but this level is important, the $200 area. You see, we had the 2 times this important area, and we pushed higher for 96% in just a month. So there is also a pullback needed. So let's see if we can pull back to the $160 or even $150. This would be a huge pullback, but after this rally it would just be normal. I wouldn't expect to go right above the $200 area, but yeah, be prepared for everything like always. Anaconda squeeze. Okay. When I get a chance, can you have a look at PTON? I'm in a put expecting it retrace to 1450. Yes, we will look at Peloton right after the news. So let's go back to Nasdaq and see it on a 1-minute time frame for the non-farm payrolls. And the news are out, and we are pulling down heavy. Look at this, 100 points to the downside. And non-farm payrolls are at 517k. Crazy. I haven't seen this. Look, the previous months were higher than expected, but only by 60 or 20k. This is immense. 500k. This is a lot stronger job market than expected. Not showing us any sign of recession right now, and a lot of more of inflation risk here maybe. If we have more than 300k more jobs created than expected, this is crazy. 100 points to the downside. Let's see if we can see a pullback here. So we retested pre-market lows. This was, let's go to the pre-market lows. No, not at all. We have still some room to go to the pre-market lows here. Pre-market lows were 12,580 points. This was the low during the European session started here, 9 a.m. my time to 3 a.m. Eastern time. But we retested previous low here, now testing next low here, and then probably see a pullback. Let's see if we can see lower lows here. Still a red candle pushing down. A lot of volume. As you can see, a lot of contracts are traded right now, even if it's 1 hour before the market is open. Some more room. Let's see if the market wants to pull further down, or if we want to retest the highs of yesterday. But it was a nice level here, as you can see. Right at the close, there was a closing at 11 p.m. yesterday, and then we reopened at midnight my time. So this is the 1 hour trading pause every day happening here in the future market, and then the futures opened with an up gap, and we squeezed higher to a level here to 12,761 points, and on point 12,761 points we met this level and then sold off before the news were out. So it will be interesting to see to which level we will pull back here. But this is a huge movement and a huge miss of expectation, of course. So we will probably close this 5-minute candle below the parabolic SAR, making it to turn to the downside, and you also see ADX is crossing really heavy. So even if we pull back, we will see a negative crossing to a downtrend. The same should have happened here on a 1-minute time frame. We now see the first pullback here, just a normal reaction. And let's see how far we can go if we use a Fibonacci here on a 1-minute time frame from the low point to the outbreak point. I wouldn't use the high point. You can also use the high point, but I would use the point when the news were out. And then we have the 50% retracement here, and the 61.8% retracement is right at the 9 EMA on a 1-minute time frame. But really often we are not able to make higher highs, just see a smaller pullback here of 50% or to the previous moving average, and then move on to lower levels. More sellers stepping in. Let's see if we can retest pre-market lows. So this was previous high point, then we had a lower low point, a lower high point, and now we are trying to push for a lower low here. Next target would be pre-market low point here at the 12,580 points area. Still moving. Next red candle. Let's see Euro US dollar. So let's go on a 1-minute time frame here. The same thing, huge red candle. When the market is dropping, there's fear. So outflow of the stocks and back to safe haven US dollar cash. Therefore, US dollar is getting stronger, euro is weakening, and therefore we see the push down in Euro USD. You can also watch DXY, but I love to watch Euro USD because it's the main forex currency pair with about 60% of the trading volume of 6 trillion US dollar trading volume for the whole forex market per day. And therefore I love to watch this really liquid forex pair here. So you see the same pattern as in the stock market. Yeah, and it was interesting because 2 times we tried to go above 110. The day before yesterday we just met it, And yesterday we pushed a little bit higher, but then sold off immediately. So 110 is an important psychological level. We talked about this in the previous live streams last week. And now we are probably retesting the previous lows at 108. So still some room to go. We are at this Fibonacci level right now. Smaller support, but still about half a percentage point to the downside room. Nasdaq pushing through now. Triggering some stop losses. Let's see if it's forming a double bottom or if we will see lower lows. Next target here, pre-market lows. If we manage to go through. This was a first attempt. Sometimes there are some scalpers trying to push back here at this level. And on a second attempt, we can maybe see the push through this area. So on a 1 minute time frame, we clearly see this downtrend now. We are below volume weighted average price, below the moving averages. Parabolic SAR is above the chart. And the same on a 5 minute time frame. The parabolic SAR dot went to the upside, indicating a short trend here. There's the second attempt for the push through the lows, still weak. And as soon as we break these levels, we'll see more stop losses triggered and a push through. Let's watch this. Come on, bears, try it. 12,600 level, an important psychological level again. Therefore, maybe some orders sitting around here. Yeah, looks like everyone is jumping off the gravy train. Yeah, it was just really overbought. So this is not the sign where I would just enter because something is overbought. But this in comparison with these bad earnings from yesterday after close and all the indicators showing that we have some weakness now, together with this catalyst news from Nonfarm payrolls, can cause really that we see more downfall here today. Maybe not before some dip buyers want to step in the first 20 or 30 minutes when the market is open. So probably we will see a retest of the lows and then some dip buyers will step in. So there is more volatility to come on this trading Friday, probably. But I think that the main direction should be to the downside now, even if we retest the previous highs again. But we have to be prepared for everything. So no push through, bulls are still strong. Retest the lows, pushing back now. Sell off at the VWAP. Still struggling here at this area. So this could be a lower high point from the previous high, lower high, next lower high. If we do not manage to go above, we now have to form lower lows to establish this bearish trend here. Interesting doji candle here on a 5 minute time frame. Normally this one indicates a change of direction, but it happened right below VWAP. So if it would have been above, it would have been a better sign for a turn. But because we are below all moving averages, ADX and parabolic SAR are indicating downtrend. So I wouldn't say this is a real sign of a change of direction, but yeah, it could always happen and be an early sign of a change of direction. So therefore, be prepared for everything. If we push above this level here, there will be probably more buyers stepping in. Fed should have raised 50 basis points. Yes, Philip, maybe, but they want to test the markets, so they are slowing down the pace and want to go higher 25 basis points in March again. They just want to see the reaction of the market and the effects on the economy, because if they go too fast, too high, then we will have huge effects, and this can cause a really worse recession, worse than expected. And I already think that an interest rate level of 4.75% is pretty high, especially because we went there in less than a year, from 0 to about 5%, probably 5% in March. Therefore, we will see the reaction of the market. It takes time. It's not like the stock market taking everything into the prices right away. It takes time until we will see the economic numbers taking into account the higher interest rate levels. And this takes time, especially for the job market. So therefore, this is a big surprise today with this higher than expected non-farm payrolls number. But we will have enough time, 2 or 3 more months, until we will see a weakening of the job market. This is normally the last number which will change when we will see an economic downturn. Because companies wait to lay off their workers, and the tech companies were the first, but you have seen Apple. Apple hasn't laid off people right now, so they think that this recession will be short, and they will just keep their good people and don't want to fire them and then hire them back again later for a higher wage. Therefore, they just wait and keep their people, even if it's costly, because they have sold less iPhones and have had less sales. Therefore, it's costly. It's costly, but sometimes it can play out in the long term. But it needs time to see this in the numbers of the job market. Okay, rejection with a lower high point. Retest again of the lows probably. Let's see. So VWAP is acting as a resistance area here, this purple line, together with the Fibonacci level, of course. Third attempt now for the lows. Let's test this 12,600 level now. And then probably push through. 50 points to go to the next support level. Pre-market lows 12,580 points. We can have a look at Peloton. Or do you want to see the push through here? Yeah, should happen now. So let's wait a little bit for the push and then move on with Peloton. There is the retest. Still some scalpers at work here, trying to hold the line. Let's just bring up Peloton and work with Peloton and then go back to NASDAQ. So Peloton on a weekly time frame, there was a huge short squeeze in this week. As you can see, we pushed above previous highs. This caused more buyers to step in and some shorties to cover their short sale positions. And on a daily time frame, we see the same huge candles, but the volume is dying out here, because you see volume went down, so no more buyers stepping in, and you see this big candle of indecision yesterday, and therefore probably we will see a turn. I would wait for a clear turning sign here. Even if we are making here higher highs, this is not immediately a change of direction, because we are just within a sideways trading phase here, from which we broke out now, but we have to go above previous highs here to see a real change of direction on a weekly chart here. Therefore, just wait for a clear break of previous highs if you want to go long. but it's far away. As you can see, this previous high point is far away here. We have a lot of room here, about 90% to the upside. So yeah, maybe this previous low points can act as a smaller resistance area here at the $21 level. But if you want to know the exact levels, just draw Fibonacci levels again from the previous high point here to the low point, and then you see the the next level could be $19.30 and $22.36, and then the $26 area on the upper side. But I wouldn't go long here on this because probably we will see a retest of the previous high points here. So push back to the $14.30 or even to the $13.30 area should be healthy, and it's just normal. This is about 10 to 15% potential to the downside. Back to Nasdaq, again trying to push through here. Tested the 12,600 level. 12,602 point was the low. Let's see if we can make these 20 points to the downside to retest pre-market lows. That could be an interesting scalp trade here at the 12,580 area for a long trade if we reach it. Still trying to hold the 12,600 level. Yeah, this is sometimes interesting to see, even if there's no support level at this round price area, we see that it is respected by the traders, 12,600, and he has a push through. Come on, 20 more points to go. $90. Yeah, almost done. Most stop losses below the 12,600 were triggered. $89 was the low, 12,589. So just 8 points below pre-market low. And there we are. Retest of pre-market lows. Even pushing through pre-market lows now, triggering some more stop losses here. And push back. 12,573 was the low point. There we should see a smaller rejection to the upside again. Bears are strong now. They gain confidence. So I would wait for market open for some dip buyers to step in. If you want to go long for a smaller scalp or up trade until market is open in the first 10 or 15 minutes, this is an interesting area. But I would wait for a short trade for higher levels to come. And maybe we can push back to the 12,680, 690, these high points here. Maybe we will see these again when the market is open, when some dip buyers step in. Because we have seen this right before the news. You see this push here. There were no news, we pushed up here about 0.6%. So probably we can see the same again when market is open. Smaller doji here on a 1 minute time frame, but bears are strong, pushing down. Still trying to push below. It's a bull and bear fight now. They are trying to hold this area. Probably a pushback for 20 or 30 points to the upside here. There are the bulls pushing higher. Yes, sugar. Let's bring up sugar because there's a question in the chat. I'm still looking at sugar here. You see these candles of indecision here, a lot of sideways trading. So I don't know if we have reached the high point yet, but we had a strong push upwards here in the previous days, and therefore it's just trading sideways and showing signs of indecision. So we have to wait for a break below the previous high point. I wouldn't take on shorts before we break below here, or wait for higher highs to come and maybe see a large flagpole candle, like I call it. So something like this or this at the last point here, and then dropping harsh from this point. So I would wait because we still can see higher highs here, even if we are in a bearish environment now in terms of seasonality, because normally in February sugar should be bearish. Sideways trading here, interesting to see. So forming a bottom, retested 12,600 from below, but still weak. So if we want to take on a counter trade, no investment advice like always, but if you want to take on a counter trade, this can be interesting for a long here. So there were some other questions yesterday. I will just look for them and bring them up again. And then I can answer these from, not from yesterday, but from Wednesday live stream. I was closing out the live stream and I wasn't able to answer these questions. So I will just answer these now. If you liked my live stream so far, please consider liking the stream and subscribing to my channel if you haven't done so far. And the questions from last Wednesday live stream, when the Federal Reserve interest rate decision was made, was can you explain the difference between the index of Nasdaq and the future? Why is there a difference of 100 points or almost 100 points? The difference is not always the same, but if you look at the Nasdaq future here, MNQ or NQ, you would probably see a higher point level than on the NQ index. Why? Because we trade the future. So this one is expiring on March 17th, so there's still more than 1 month until this future expires. And if you trade a future, you will always have leverage because you trade it on a margin basis. You only have to have about 8% of margin for trading the future. So every micro Nasdaq future has a contract size of 2 times Nasdaq. So the point value here of 12,600 points times 2 is about $25,000. So you only need about 8 to 10%. Let's just calculate it with 10% because it's easier. So you just need $2,500 for opening 1 micro Nasdaq future, and this causes the leverage because you are turning a position with a volume of $25,000 with only $2,500 in your account. So the other, if you have 25,000 in your account, you can trade, of course, and buy a whole Nasdaq, but you only need $2,500, and the rest you can open other positions. This causes the leverage. But you can also take it on an interest account and earn interest because interest level is pretty high right now. You can earn up to 4 or 5% interest for the rest if you're just having $2,500 or $3,000 on this account, and the rest of the 25,000 you take on an interest paid account. So you have opportunity costs. These opportunity costs, in this case, when you are trading the future, are your gains because you can earn interest. But another one, if you are comparing someone investing into stocks for 25,000, so stocks or an ETF like QQQ, he needs to have 25K and he cannot earn interest. And therefore, just in the reason of comparison, there has to be a difference between future and the index of some points. So the future is priced higher, you have to pay more because of these interest payments you could earn on an interest account because you don't have to invest 25K. And what happens now until March 17th? The future will drop these 100 points. So it will lose every day some points. And on March 17th, the index and the future are the same, because the future isn't a future anymore, because then it is a spot market product. It is the index. So the values have to be the same. And therefore, the difference between the index and the future is not always the same. It's not 100 points difference all the time. It drops. So the difference is 100 points maybe at the beginning, and then it drops to 95, 90, 85, and so on. It goes down. And at the end, when there's the expiry of the future, the index and the future prices are the same. And the reason is because of the leverage and the opportunity cost. So there is the possibility as a future trader going long that you can take on the rest of the money you do not need for margin reasons to take on an interest account. And if you are shorting the future, then you will gain these points because this is the interest you won't have, and therefore you gain it by shorting the future. And this is just a normal situation when we are trading in contango. This is called contango because the next futures, the future expiring after March, is priced higher. So the June future is priced higher than the March future. So there are different expiries you could trade right now, but normally we are trading the front contract months, and the front contract months is March right now. This every quarter, so the last one was December, then March, then June, and then September, and then December again. So if you trade the next ones, you will see that these ones are priced higher, and this is because of opportunity cost. And the higher the interest rates are, the higher the difference between the index and the future prices should be. So when the interest was at 0%, there was almost no difference, or not a big difference, between the index and the future. But now the differences are bigger because of higher interest rates. So I hope I could answer this question for you. This is just the reason why you always will see a difference, which is not always the same in between future and index. The next question was, how did you come up with your trading strategy? Has it always been the same? No, of course not. I'm trading for more than 10 years now, so I gained some experience just by watching the charts and just by losing money as well, but my strategy has not been the same. And also the instruments have never been the same. I am trading with options now for more than 10 years. I started option trading in 2012. But my trading strategy is a little bit different if you, in terms of swing trading here with futures, because you have a multi-dimensional strategy with options because of implied volatility, theta decay, and so on. You don't have this with futures. You only have the decay of time because of these opportunity costs we just talked about. But the rest is just a directional strategy. So you have to take on a trade for long or short. You cannot trade sideways with futures, so you will not gain money here if you're expecting the prices to go sideways like this here in the previous 10 minutes. You will not make money. With options, you can make money in sideways trading. But with futures, it has always something to do with a technical thing. And this is why I love to trade with the technical analysis, because you see here these levels were important. Yes, of course, we went a little bit lower because of triggering some stop losses, but we could clearly see this pre-market low, and it was easy to see. Why is the market turning at this point? It has no fundamental reason, really. It has no fundamental reason. This has nothing to do with non-farm payrolls. It's just a technical thing. And this was the previous 2 days the same. Why was the market pulling up this harsh after the Federal Reserve meeting? There's no reason. There was, yes, Jerome Powell was a little bit more dovish than hawkish, but this cannot explain a movement of more than 700 points in 2 days. This is crazy. And therefore, this is just a technical thing because of the positioning of the market participants and the technical levels. Why is the market turning here right below the 13,000 area? Because it is a major resistance point. Yeah, and that's it. And therefore I love to trade with these technical lines and using Fibonacci. Yeah, why does it work? Because it works. That's it. And because a lot of people are using it. And the more the people are using it, the more it works. That's crazy. Yes, there are a lot of Fibonacci levels in nature as well, but this has nothing to do with the stock market. But because a lot of people use it and see the same patterns, they trade these patterns, and then the changes happen right there at these levels. And this is what I love in my trading style. It's easy. It's like a KISS principle. Keep it simple and stupid. It's not rocket science. Everyone is able to trade. Yeah, that's easy. You don't need a certificate to start trading at stock exchanges. But sometimes this is bad because a lot of people think that it is so easy that they can be a millionaire or billionaire the next day. And this is just false, because you need a lot of knowledge to know where to cut losses, because you will never be right 100% of the time. And this is the most difficult thing about this job. Yeah, if you want really to use trading as a job, then you have to have the knowledge and not just trading as a hobby, because then you can go to a casino and there you can also lose money and have some fun. But a lot of retail traders just use it as a casino. So they are betting and placing some smaller bets with their money, and if they lose, they lose. But some are like in a casino, they trade with too high stakes, and then they lose, and then they fear, and then they get wild and crazy. And this is what causes all these waves on the stock market. Not only retail traders, even the bigger ones, but there are some big speculators which are also caught on the wrong side. But if you know what you do, so if you are a trader not for a hobby, but for a living, like I am, then you should know what you do. You should know where the levels are. You should know where to cut losses. And this is the more important thing about trading. It's not about trading itself. It's about mind, about psychology, and all these things which are important for trading, and to keep calm and not going crazy and wild if you are on the wrong side. You have just to know when you are on the wrong side and when you have to leave your position. But we were talking about this half an hour ago, about this level here. So it was not complicated, yeah? It is easy. But the more difficult thing is just to really do it, to trade it, and to know where to place your stop loss or your take profit and so on. So the position sizing, the trading time frame, these are the really important things. Not where you enter a position, but where you exit it. So how much are you willing to risk, or how much do you want to gain? So the risk to reward ratio and so on. Because if you always place trades with 50% probability, then it should be easy, if you have a good risk to reward ratio, to be on a winning streak. Because 50% losers, 50% winners does say nothing about how much money you're making. But if you're placing only bets with a 3-to-1 risk reward ratio, then you have, even with 50% losers, you will have at the end more winners. So in terms of what you made in dollar terms. And therefore, always look at these factors. So where do you want to exit your trade? You can just throw a coin and say, I'm going long, I'm going short. But more important is where you exit. And therefore, look at the important levels. Whatever technical analysis you do, if you're a trader, you have to know where to exit, to cut losses, or even to take profits. That's really important, because I wouldn't cut the gains too early. Always let winners run, but sometimes it is important just to take out a little bit of the risk and say, okay, it has gone so far that I will take out some of the risk now and will just take some gains from the table. And this is also important for a trader to know. And this takes time. You will not learn this in 24 hours. This is experience. And even if you are in a trading course, you can learn all these technical stuff, but keeping with emotions and so on, this takes time. And this is just knowledge. You cannot learn just by reading. You have to have these emotions in real terms with real money. And then you can learn to deal with it. This is the most complicated thing. I think 80% or maybe 90% of the retail traders are not able to cope with. And this is what differs from a gambler and someone who is trading for a living, to be able to do these things in the right way. Okay. Still sideways trading. I don't think that it has decided right now what it wants to do, but I think that on market open we will probably see some dip buyers bringing the price maybe back here to the 12,670, 660 area, back here in this area. and then we maybe see more sell-off here. So for the next days and especially next week, there is more sell-off potential in my eyes. Even if we see a retest of the 13,000 level, we shouldn't be able, after this huge rally, we shouldn't be able to break it right away. There are no major good news for the next week to wait for, which should cause this rally. So let's see the news for next week. And you see there are almost no 2 and 3 star events, no major events. Yes, there's a Fed speech of Powell on Tuesday at around noon, but I don't think that this will move the market a lot. And the other things are just the weekly numbers like crude oil inventories and initial jobless claims. The rest is only 2-star events, so nothing really important. The next really important news are on February 14th, because there again we will have CPI data. And this time it's really interesting because the previous number was 5.7% and the forecast is 5.7%. So no more slowdown expected right now. And this is interesting because you have seen the job market numbers a lot higher than expected. So this is not indicating a slowdown of the inflation numbers. And this can cause new fears. So we have to wait 1.5 more weeks to come, but the next day is really without any major economic news, just the speech of Jerome Powell. But I will try to live stream 1 or 2 days next week, and therefore please consider subscribing to my channel, click the bell to be informed every time I will go live. Thank you for all your questions. Hope you had a nice time. Hope you had a nice week so far and could make some major gains here. And if not, then wait for the next week. There will be new chances every day, and therefore don't give up. You are just at the beginning. You will have new chances the whole year. I wish you a nice trading Friday, a nice start into your weekend. Happy trading. See you next time. Goodbye.